The moment your husband takes his last breath, the bank does not wait for the funeral. It does not wait for the paperwork. It does not wait for you to catch your breath or make it through the first night alone in that house. In Florida, the moment the bank finds out your spouse has died, your joint account can be frozen within 24 hours. Not because anyone hates you, not because you did anything wrong, because that is simply how the system works, written into the fine print of how banks handle accounts after a death. And nobody sits you down and tells you about it until you are standing at the counter with a declined card in your hand and a line of people behind you. If you are a widow in Florida, or if you are about to become one, or if your husband is sitting right next to you on the couch right now, healthy and reading the paper, this video is going to save you thousands of dollars and weeks of panic. We are going to walk through 5 things that happen the moment your spouse dies. 5 things the bank, the county, and Social Security are never going to explain to you in plain language, in a phone call, or in a letter that actually makes sense to a real person going through the worst week of her life. Stay until the last one. Most widows never do it, and it is the one that protects the most money over the rest of your life, not just in the first few weeks. Before we go further, hit subscribe. Florida changes these rules almost every single year. Income limits move up or down a little, exemption amounts shift. Deadlines get adjusted by a few weeks here and there, sometimes without much notice at all. And nobody sends you a letter when they do. The people who stay subscribed to this channel are the ones who find out in time before a deadline passes or a benefit quietly disappears. The people who do not are the ones who call an attorney 6 months later, sitting across a desk asking why nobody ever told them any of this while there was still time to act. Let me tell you about Dorothy. Dorothy is 74 years old. She lives in St. Petersburg, in the same small house she and her husband Earl bought back when their children were still in elementary school. She has lived on Social Security since Earl passed 3 years ago. For 41 years, Dorothy and Earl shared one checking account at the same local bank branch. Dorothy paid the electric bill from that account every month. She paid the water bill, the property insurance, the groceries, the copay at the pharmacy. She knew the account number by heart, the same way she knew Earl's coffee order. 2 days after Earl's funeral, still in shock, still exhausted from receiving family and arranging flowers and signing a stack of papers she barely remembers signing, Dorothy went to the bank to pay the electric bill like she always did, on autopilot, because that is what her hands knew how to do even when her mind could not focus on much else. Her card was declined at the counter, not once, twice. The teller looked embarrassed and quietly asked her to step aside and speak with a manager in a small office near the back. The account she and Earl had shared for 4 decades was frozen, not because of anything Dorothy did wrong, because the account was titled only in Earl's name, with Dorothy listed as an authorized signer rather than a true joint owner, and Florida banks are required to lock certain accounts the moment they are formally notified of a death, until the estate paperwork clears through the proper channel. Dorothy did not have $200 in cash in her purse that day. She had thousands of dollars sitting in an account she suddenly could not touch, while the electric bill and the water bill were still due that same week, and nobody at the bank offered her a solution beyond a pamphlet. This is not rare. This happens to widows across Florida every single week, in Tampa, in Ocala, in Fort Myers, in Pensacola, in every single county in this state, from the Panhandle down to the Keys. And the reason is always the same. Nobody explains, before the death, what kind of account you actually have and what happens to it the day your spouse is gone. Banks do not sit widows down years in advance and walk them through account titling. Attorneys only get pulled into the picture after the fact, usually after the freeze has already happened and the widow is already stressed and scrambling. The information you need exists somewhere in a filing cabinet or a policy manual. It is just never offered to you before the moment you actually need it. Now, before we go into the 5 things, let's clear up 2 things people always assume, and both of them are wrong. This is not just for widows with a lot of money sitting in the bank. Dorothy did not have a large estate by anyone's definition. She had a modest checking account, a paid-off house worth maybe $200,000, and a small pension from Earl's years working at the local utility company. She still got frozen out for weeks, and she still lost access to money she needed for basic bills like electricity and water. This is not just for women who never handled the finances and do not know where anything is kept. Even women who paid every single bill for decades, who knew every account number, every due date, every insurance policy by heart, got locked out anyway because knowing the numbers is not the same thing as having your name legally attached to the account in the correct way. This information is for every widow in Florida, whether you have $50,000 saved or $500,000 saved, Whether you handled every single bill yourself for 40 years or never once touched a checkbook in your life. Here is the first thing, and it is the one that hits fastest, sometimes within hours. Joint bank accounts are not all the same, and the difference decides whether you get frozen out or not. If your account is set up as joint tenants with right of survivorship, the money is legally supposed to pass to you immediately without going through probate court at all. But here is what nobody tells you, and it catches almost everyone off guard. Even with the correct kind of account, the bank still has the legal right to place a temporary hold the moment they are formally notified of the death, while they verify the account type on file and confirm your identity as the surviving owner. This hold can last a few days if things go smoothly. It can last several weeks if the paperwork is not handled correctly, or if the branch is understaffed, or if there is any confusion at all about how the account was originally titled back when it was opened. Here is what to do the same week your spouse passes, not months later, not after the funeral costs have already piled up. Go into the branch in person, not over the phone, with the death certificate in hand, and ask the banker directly in these exact words, "Is this account titled joint tenants with right of survivorship, and is there a hold on it right now?" Do not accept, "I'll check and call you back" as an answer and simply walk out the door. Ask for the hold to be reviewed the same day while you are physically standing there in front of them. If the account is not titled that way and it is simply in his name with you listed as an authorized user rather than a true joint owner, that money can go into probate, and probate in Florida can take 6 months or longer before you see a single dollar of it released to you. The fix, if your spouse is still living and reading this with you right now, is to retitle the account today, this week, not someday down the road when it feels more urgent. The fix, if your spouse has already passed, is calling an elder law attorney this week, because Florida has faster small estate procedures available for accounts under a certain dollar amount, and most bank employees never mention that option to you unless you specifically ask for it by name. Here is the second thing, and this is the one that costs widows the most money without them ever realizing it happened, sometimes until a letter shows up months later demanding it back with interest. Social Security does not just stop paying when your spouse dies. It can take money back from you, sometimes months down the road, sometimes with a letter that reads like a legal threat instead of a simple explanation. Here is exactly what happens behind the scenes, in plain language. The month your spouse dies, Social Security considers that entire month a month he was not eligible for a payment at all, even if he was alive for part of it, even if he was alive for 29 of the 30 days in that month. If a payment for that month already landed in the joint account before anyone reported the death, Social Security will reclaim it, one way or another. Here is what to do. Call Social Security immediately at 1-800-772-1213 and report the death yourself, personally, even if the funeral home tells you they will report it on your behalf, because that automatic reporting does not always happen quickly, and it does not always happen correctly the first time. Ask the representative directly in these exact words, "Was a payment issued for the month of death? And if so, how do I return it correctly so it does not get flagged as an overpayment against my own record going forward?" If you do not return that payment through the right channel, the correct way, that amount can be deducted later from your own survivor benefit check, sometimes without a letter that clearly explains why your monthly payment suddenly got smaller. Handle this in the first 2 weeks after the death, while it is still a simple, clean correction, not 6 months later when it has quietly turned into a formal overpayment and debt collection matter tied permanently to your Social Security record. Now, here is what most widows do not know exists at all, and it is real money left on the table by almost every single widow in this state, year after year. When your spouse dies, you may be entitled to switch over to a survivor benefit that is significantly higher than what you are currently receiving on your own work record. If Dorothy was receiving her own smaller Social Security check based on her years working as a school teacher, and Earl's check was larger because of his decades at the utility company, Dorothy does not simply keep collecting her smaller amount for the rest of her natural life by default. She can step up and switch to receive Earl's full benefit amount instead, as early as age 60, though at a reduced percentage if she claims it before reaching her own full retirement age. This switch does not happen automatically in every single case, and Social Security representatives do not always volunteer this side-by-side comparison unless you specifically push for it during the call. Here is what to do. Call 1-800-772-1213 and ask specifically in these exact words, "Am I eligible to switch from my own retirement benefit to a survivor benefit based on my spouse's record? And what is the highest monthly amount available to me right now, today?" Do not accept a vague answer like, "You're already getting your benefit," and simply hang up the phone satisfied. Ask for the comparison to be run out loud, both numbers side by side while you remain on the line. Widows who never ask this exact question can lose hundreds of dollars every single month for the rest of their lives simply because nobody at the agency offered the comparison first, and nobody is required by law to call you up and offer it. Here is the fourth thing, and this one is about the house sitting under your name, not the bank account or the Social Security check. If you and your spouse owned your home together with a homestead exemption already in place, that exemption does not automatically vanish the moment he dies, but the county does need updated paperwork filed under your name alone, and if you skip filing it, you can lose part of your property tax savings starting the very next tax year, quietly, without a warning letter. Here is what to do. Go to your county property appraiser's office in person, not online, not by phone, with the death certificate in hand, and ask them directly in these exact words, does my homestead exemption stay in place under my name alone, and do I need to refile using Form DR 501? If you are 65 years old or older and your household income is at or below $38,686 a year, also ask specifically about the senior additional exemption using Form DR 50E1SC, which can add up to $50,000 more off your home's assessed value, stacked right on top of the standard $50,000 homestead exemption you already have. Widows across every county in Florida frequently qualify for this additional exemption and are never told it exists, because nobody from the county calls you up and offers it out of courtesy. You have to walk in yourself in person and ask for it by its exact form number, DR 501SC, or the clerk behind the counter may simply process your basic renewal, hand you a receipt, and say absolutely nothing about the extra savings sitting right there waiting for you to claim it. While you are at that same counter, also ask about the long-term resident senior exemption, which can eliminate county and city millage entirely if you are 65 or older, have lived in that same home for 25 years or more, and the original purchase value was under $250,000. Many widows in older Florida neighborhoods qualify for this without ever knowing the exemption exists at all. And here is the fifth thing, the one I asked you to stay for, because it is the one almost nobody does, and it is the one that protects the most money over the long run, not just in the first few chaotic weeks after the funeral. Go through every single account, every policy, and every bill that was only in your spouse's name, not just the checking account, and not just Social Security. Life insurance policies sitting in a filing cabinet you have not opened in years. Pension survivor elections from a job he held decades ago. Utility accounts still listed under his name at the county or the power company. Even the title on the car sitting in the driveway right now. Each one of these has its own separate claim process, its own separate paperwork, and its own separate deadline, and every single one of them is going to ask you for a certified copy of the death certificate, not a photocopy, not a scanned image, an actual certified copy with a raised seal from the county clerk. Order at least 10 certified copies from the funeral home or your county clerk's office right away in the first week if you can manage it, because you will need one for nearly every single institution you end up contacting over the coming months, and running out halfway through the process means weeks of frustrating delay waiting for more copies to arrive by mail. Here is what to do. Make a written list this week, on paper, of every single account and policy that exists only in his name. Call each one at a time, slowly, and ask the exact same question every single time. In these exact words, what exact documents do you need from me, and what is the deadline to file my claim? Most widows only handle the bank account and Social Security in those first few overwhelming weeks, and let everything else sit completely untouched for months at a time, and some benefits, like certain pension survivor elections tied to a former employer, have strict filing windows that do not wait patiently for you to feel emotionally ready to deal with them. While you are working through that list, there are a few more overlooked resources worth checking in the same breath, because widows on a fixed income often qualify for programs nobody mentions during this whole process. If your household income dropped after your spouse passed, call 2111 and ask about LIHEAP, the energy assistance program that gives priority to seniors 60 and older struggling to cover electric and cooling bills during Florida summers. Ask your phone or internet provider about the Lifeline program, which knocks $9.25 a month off your bill if you qualify based on income. And if Medicare premiums are now stretching your budget further than before, visit your local SHIP office, which offers free screening for Medicare savings programs like QMB and SLMB, programs that can cover your Part B premium of $290 a month, and in some cases your deductibles and copays as well, depending on where your income falls after this loss. So here is everything in one breath, because I know this is a great deal to hold on to all at once, especially right now. Check your account titling before it turns into a frozen card at the counter in front of strangers. Report the death to Social Security immediately and ask about the death month payment before it quietly becomes a debt against your own future checks. Ask specifically, using the exact words we gave you today, about switching over to the higher survivor benefit you may be entitled to. Refile your homestead exemption using Form DR 501, and ask in person about the senior additional exemption using Form DR 501SC, along with the long-term resident exemption if you qualify. And go through every single account and policy in his name, not just the obvious ones sitting on top, with certified death certificates already in hand before you even start making the first phone call. This video is for general information only and does not replace personalized advice from a licensed elder law attorney, a financial advisor, or your local Social Security office, since every widow's situation carries its own details, and every estate is a little different from the next. If this video helped you today, share it right now, this minute, with one person you love who is over 65, or with a widow you know who is going through this alone right now, without anyone sitting beside her to explain any of it. It could be worth thousands of dollars to her over time, and it could spare her the exact moment Dorothy went through, standing at a bank counter with a declined card in her hand at the worst possible week of her entire life. At Florida Senior Money, we are not here to sell you anything at all. We are here to make sure you get every single dollar this system already owes you, the dollars it will never once call you up and offer on its own.